I'm Deborah Owens, America's Wealth Coach, and it's time to get wealthy. You're going to learn exactly what you need to know and do to finally achieve the level of financial success you desire and you deserve. Let me ask you a question. Are you an earner or an owner? What if I told you that the secret to building wealth is hidden in the tax code? That's right. What many people don't realize is that our tax code incentivizes entrepreneurs and investors. And in order for you to learn how to leverage the tax code to build wealth, you need to know what to do. And that's why I'm really excited, because we have someone here who we're going to have a conversation with, who's also known as the gatekeeper to the IRS, and she's going to help us understand exactly what we need to know. So Wanda Watson, welcome to Get Wealthy.
Hi, Deborah. Thank you. Thanks for having me. It's good to be here.
Oh, it's a pleasure. It's a pleasure to have you, but let me share with our guests just a little bit about you. You are the CEO of Premier Business Services, and you help business owners and individuals kind of navigate the tax landscape. But one of the other things that you're an expert at is really helping folks with tax strategies. And so that's exactly where I want to start. Like, there are so many people, and in fact, African Americans are the fastest growing segment of entrepreneurs. And yet, what we also know is that when you become an entrepreneur, you can make some mistakes. And so I want to start with, what are some of the common mistakes that you see from your perspective that people are making as they're making this shift from earner to owner?
Wow, that's a great question. Actually, the biggest mistake is the entity. So, the big thing is you're having you own a business and form an LLC. So that's what everyone says, I have to form an LLC. But what they don't understand are the tax consequences of the LLC. Now, the LLC is the simplest entity to form, and with the least guidelines, if you will. It has more gray area because it's the newest entity that's available. But what they don't understand is, as they're growing their business and there's a net profit, and that net profit continues to increase, their tax liability begins to increase as well, because it's
I want to stop there, because one of the points that I like to tell people is that upon meeting you, I was asking you some questions, and I had sort of an inkling that I should be changing my entity, but I wasn't sure. And when I conveyed that to you, you were like, yes, you should do X, Y, Z. And I was like, really? And so then I called my CPA and I said, well, I was talking with someone and they said I should do this. And they were like, yeah, you should do this. And then, my mouth was kind of agape, because I was like, well, why did I have to find this out? Why didn't you have to tell me? And so the reason I wanted to stop you was because I think oftentimes people are listening to everything that's on there's so much information available, right? And you're hearing these things, well, you need to start an LLC and you need to do this. And so it's almost like people have enough knowledge right now to be dangerous. So yes, that is one of the common areas that I think you're seeing. And do you think that it really is based on people having access to the information, but not necessarily the insight that you need behind it?
I think that's exactly what it is. And most people, when they start a business, they are not prepared properly. They don't understand that they need to have a banker in their corner. They need to have some sort of legal guidance in their corner. They need an accountant in their corner. And what they're doing is they're starting businesses and they don't have the budget to sustain the things that they need to help them grow, right? So again, so they form the LLC because that's what they're talking about in the beauty shop or in the barber shop, form that LLC, but they don't understand the tax consequences pertaining to it. Yeah.
So,
now, the big thing you just said, Deborah.
No, go ahead.
Yeah, the big thing you just said is you went back to your CPA and said, hey, why am I filing as an LLC? Why am I using this entity? That's the crusher right there. Because as I've shared many a times, there's a difference between a tax preparer and a tax planner. And your CPA clearly was preparing your taxes, but not doing as much planning as perhaps he or she could have been doing.
Well, no, I mean, you bring up a very good point. And the reason I wanted to have this conversation with you is because I know just within my own circle, the number of my friends and colleagues who maybe were just professionals are now sort of monetizing their expertise. And so I really feel like where I want to start is in our framework that we use on Wealthy You, our model for success, which you're aware of as well, is mindset, strategy, and execution. So that's where I want to start, because I really feel like the mindset of a employee versus a CEO, even if you're transitioning to a CEO, is different. So I want to begin there. What is the mindset that people in our audience who are considering becoming an entrepreneur or business owner need to have in order to be successful and make the right moves to build a sustainable business?
Yeah, I think the biggest mindset is to look. Well, the first thing I would always say is look at your relationship with money, right? Because that is going to determine how you're actually operating and showing up in your business. So, as a business owner, you need to understand that you have to invest back into your business in order to make it work. One thing that always comes up from the IRS realm is, are you using your business as a bank? And that's a big no-no, right? So again, investing back into your business and having I'm not sure if you understand it, if you're aware of the Profit First module. I totally subscribe to that. So depending on your income level, then you would put a percentage in your owner's account, and that's what you would use for payroll for yourself. And then there's other percentages, your operations account, your tax account, your retirement account. That's like really, really huge. And a lot of people cringe when you hear that. But again, it's really making your business work for you. So you have to be of the mindset that everything that comes in is not going into your pocket. It does need to be directed in other ways, and you need to have the strategy behind making it work. But again, like I said, that is where those professionals that you need in your corner, that's where they come in. The attorney, the accountant, the banker, et cetera.
Yeah, well, it is interesting. That's the reason that I wanted to have this conversation, because I can remember early on starting my business, and so much of the focus is on deductions, right? Mm-hmm. And so for the first few years, not even having an accountant, my tax preparer would really look at it from the standpoint of how can you write off more so that you don't pay as much as taxes, because you do. At that point, I had a full-time job and I had, income from speaking engagements and that sort of thing, which is why we set up an LLC. And and I hear this a lot sort of on social media, just, about, you want to start a business so that you can write off everything. But and so getting back to that bank, the point that you were making, not using your business like a bank, can you just expound on that a little bit? Because I really feel like that's important.
Yeah, that's really important. Especially if in the event of an audit, there are times when the IRS is going to ask to see your bank statements and things of that sort. And I've encountered certain situations where the business owner may go to a show and buy tickets, but, you know, it's clear that it's for the family. It was a family affair. Or they may be, you know, in our market, you know, going to the hair store or what have you. So those are the type things that I really zone in on with my clients. And it's like, okay, what you're supposed to do, remember that owner's account that I mentioned previously, that's your money, right? That should be transferred to a separate account. That's your personal account, you know, ultimately. And you would pay your personal expenses from there. And your business account, ideally, most of the expenses, if not all, should be business related. And as small business owners, many business owners feel like, okay, hey, I'm running to Chick-fil-A for lunch and I'm going to swipe my card and I'm going to Dunkin' Donuts. You see a lot of that. You see K Jewelers, you just see it. And anyway, so if you find yourself in a position where the IRS is auditing you and they're looking at your statements, those are things that really raise a flag. And that's really a huge no-no with them, is not using your business as a bank.
Okay, well, yeah, because I really wanted you to define that, right? Like not using it as a bank account. And in fact, if you are, it's not like you can't have business expenses, but in order for that to not be frowned upon, that expense that you're using in your business account really needs to be business related, so that if it were a dinner, that you could go back to your calendar and say, oh, well, yeah, I was meeting someone, or we were talking about business or that sort of thing. And so that's the point you meant about your bank. So love that you focused on that. So one of the things, when we come back, we're going to go to the next aspect, and that really is strategy. So what are the things that you need to know, and what are the things that you need to prepare to do in order to really be able to leverage the tax code, if you will, and build wealth the right way. So don't go anywhere. We'll be right back.
Let's be honest, as successful women, we're crushing it. Maxed out 401k and Roth IRA? Check. Aggressive savings and investments? Check. Yet, the freedom our success was supposed to buy can leave us stuck on the six-figure hamster wheel, watching retirement slip further down the road. There's another way. Get coaching courses and community at wealthyu.com.
So here are the 3 things that they don't want you to know about our U.S. tax system. The first thing is that the tax code really does favor owners over earners, because, as I said, in our tax codes, entrepreneurship is incentivized. The second thing is that earned income, or that W-2 income, it's taxed at the highest rate. And then finally, one of the other things that's in our tax code that you may not be aware of is that real estate ownership is also incentivized in our tax code. And that's what we're going to cover today. That's what you're going to learn. So don't go anywhere, folks. We'll be right back.
Pull up a chair, take your seat. The Black Tape with me, Dr. Greg Carr, here on the Black Star Network. Every week, we'll take a deeper dive into the world we're living in. Join the conversation only on the Black Star Network.
I'm Deborah Owens, America's Wealth Coach, and we're talking about making the shift from earner to owner, and what are the things that you need to know that are hidden in our tax code that really can be tantamount to you building wealth. And joining me today is Wanda Watson. She is an accountant and also an enrolled agent that calls herself the gatekeeper for the IRS. So Wanda, thank you so much for joining us. So we talked about making that shift from the mindset of maybe an earner, right, employee to an owner. And I love that you brought up the point of, not using that income or your business as a bank. So I want to get into strategy, and specifically for those who, I know many people who are still have their day job, right? Their full-time job, but they understand that they need to be, maybe in the future, they want to transition to a full-time business or business ownership. So if that is the case, what kind of strategies should you have if what I just said describes you? You're not full-time, you have some side hustle, if you will, income.
Yeah. And I strongly encourage that. There are so many people who are like, well, I want to go out on my own, but I'm afraid because I need the money and what have you. And I totally would say, don't just jump in, feet first, just, take it slow and build on that. Right. So you use the same strategies, but then because you do have your W-2 income, you can take more of your business revenue to help to build your business. But those are the things that I strongly encourage them to do. So, and then to keep in mind that the whole thing is to make sure that you make your business work for you and your family, right? And understand that then now you have things that you can set up that you can fully take advantage of, like the business use of the home. So with the change in the tax code, where we no longer have the number of exemptions and then your deductions are based on your filing status, right? So the exemptions is gone, and therefore, writing off your mortgage interest and your real estate taxes in many instances is no longer an option. But as a business owner, you can now at least take advantage of some of those deductions, the business use of the home, where you can write off a percentage of your home expenses based on the business use. So the main thing is be of the mindset that your business is working for you and working for your family, and find ways in which you can do so, whether that's the self-employment plan for health insurance, setting up your retirement. That's a huge one, right? There's so many entrepreneurs out there that have not even set up a retirement plan, and it's because they're not investing back into their business and they're not investing back into themselves. So it's not unusual for me to suggest to my clients that, hey, you need to get some mindset work. Because again, Deborah, what you're doing, teaching them wealth strategies, a lot of it, as you know, it just gets back to the overall mindset. So I'm trying to get them to understand that, it's a mindset shift that needs to be made, where so you're investing in your business, you're allowing your business to work for you, and you're putting things in place to earn wealth and create a legacy for you and your family.
Well, you're talking my love language when you're talking about people setting up additional plans outside of just their work. If your point is, if you're self-employed, part of that income then allows you to establish what is called an SEP IRA. If you're just solo owner, then you could set up a 401k, or if it's just you and your spouse. And so there are all different kinds of strategies that you could take advantage of. And what I love what you're saying, and I want to make sure our audience gets this, you keep going back to investing in your business. And what I found is, and even if I look at the maturation of my own business, and that is making sure that you're investing in a CPA that is doing that is a tax planner and a tax strategist, and because that costs, right? That's your point. The other thing is making sure that you have in place all of the different things that you need that are going to, they're going to cost you, but in the long run, right? You're going to have the right systems in place. And I think so often that's where people fall short is they're kind of, again, all of this information that's on the internet, people think they can do it themselves. And so the other point the other thing that I want to cover a little later is that you mentioned different entities, right? And how you should be, in terms of strategy, how you should be setting up your business. And so I would love for you to share, like, is there a certain path that people should take? So for example, it's just me, I'm starting my side hustle, then I might have this kind of entity. Then when I get to the next level where maybe I'm earning over six figures, I should go to the next level. Is there a roadmap of that kind of framework? Or is it just different depending upon what type of business you have and how much income you're generating?
Yeah, so there's a generic roadmap, I will say. And of course, it would, depending on the classification, there may be some changes, right? But as a rule, as a guide, if you will, let's just say you form your LLC. Now, I strongly encourage forming the LLC because that's a limited liability corporation that protects you. And what that means is, as we've spoken before, it's not about just, minimizing your tax liability. It's minimizing your exposure, overall. So you want to protect yourself and your family. If you operate as a sole proprietor and do not form that LLC, then you're fully exposed. So if someone wanted to come back and, sue you, if you will, then you're fully exposed. And so that's your house, your car, whatever it is fully open. Whereas though when you form that LLC, then you have that corporate veil, if you will. Now, that's the thinnest layer of corporate veil that you can have as an LLC, but at least you have that corporate veil. One thing you need to keep in mind is if you're going into business and it's just you, a single member LLC files the tax return as if you are a sole proprietor. You're considered a disregarded entity. If you have a partner, you then have to file a partnership return. And the tax code is pretty much the same as far as the self-employment taxes and things of that sort, whether you're a partnership or a single member LLC filing as a Schedule C on your 1040. But once you start earning, I normally say 85 to 100,000 or more. And again, it's really depending on that bottom line, right? You want to start considering filing as an S corp. And what this means is you're telling the IRS, I realize I'm an LLC, but for tax purposes, I would like to be considered an S corp and file an S corp return. The beauty of that is, one, you still have that self-employment and Medicare tax, but it's only on what you pay yourself under payroll. But two, you can then take a distribution that's not subject to that Social Security and Medicare, and you're shielding 15.3% of your overall tax liability. That is huge. That is absolutely huge. And just to tell you a story, I had one young lady that actually came to see me last year, and she had a bookkeeper, and she came in to get her taxes done, and she owed, this was for her 2020 tax return, and she owed like $40,000. And I quickly converted her. And when she came in this year, she still has her bookkeeper, so I gave her some strategies, but she came in here this year, and that $40,000 was down to $8,000. So wow. That is very huge. Yeah.
It is huge. And what's so interesting, Wanda, is that financial ignorance is expensive. Mm-hmm. And it's like I see people stepping over, it says dollars to get to pennies, right? Meaning they think that they're saving money by trying to do it yourself, and do all these things yourself. And what you don't know is that that's exactly why you want to invest in your business and invest in expertise and build a team, because that team in the long run, if you have the right strategy, you're going to easily get a return on investment. So, you know, we've talked about strategy, and now I want to talk about, when we come back, I want to talk about execution. And it really comes back to, you know, what our conversation keeps going back to: investing in your business so that you can make the right moves, not find yourself subject to tax liens or tax liabilities, which I've seen so many businesses go out of business as a result. So when we come back, we're going to talk about exactly what you need to do now if you are making the shift from an earner to an owner, to make sure you've got all the right things in place and you know how to execute brilliantly.
We're all impacted by the culture, whether we know it or not. From politics to music and entertainment, it's a huge part of our lives, and we're going to talk about it every day right here on The Culture with me, Faraji Muhammad, only on the Black Star Network.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and hopefully you're learning a lot about getting wealthy. And today we're really focused on getting wealthy from understanding the tax code and how that can really be the hidden secrets that many of the wealthy use in order to build generational wealth. My guest is Wanda Watson, a tax strategist and also CEO of Premier Business Solutions. Wanda, so you've given us so much to think about here, and I love the story that you just told. And so to that end, right now, I want to talk about execution, and I want to ask you to think about someone that you've helped that perhaps was working full time, and then because they had used the right strategies, they were able to scale and execute on a lot of the things that we're discussing today. So any stories you want to share with us?
Wow. Oh, I'd love to. Let's see. I have one client in particular that worked for a particular company, say in IT, let's just say in IT industry, and who decided they wanted to go out on their own. And so we started off small. We formed that LLC. Now there was a partner, he and his wife, right? So now it's a partnership tax return, and they're working together and they're building this business while he's still in his W-2, his earner position. But he was taking a lot of what he could, you know, to invest into the business. And until he got to the point where it could sustain he and his family. And now they're on their own. They've converted to that S Corp. They've put the retirement place, you know, they're open and they're open to learn and they're doing it, right? So the retirement is in place and the health insurance is now being ran through the business. He's no longer an earner. He left his job and they're doing quite well. They're making multiple six figures now. And I just found it a blessing to be able to guide them along their way. So, yeah, I love that.
Yeah, no. I love that, because one of the other points that I want to make is that I think that, you know, in the landscape, we're hearing all of these stories about, oh, they have a seven-figure business. So I want to challenge you on that too, because I think when people hear gross numbers and they hear that, oh, you did seven figures in revenues, that doesn't necessarily mean you can have a lot of top line money, right? Bring a lot of money in, but not have any left over. And so to that end, you just shared with us that story. What is a reasonable time to give yourself a realistic, that's what I want to say. What is a realistic time frame that you would share with someone about what it legitimately takes to make that side hustle, then eventually be replace your income and you actually become a full-time owner?
Wow. Deborah, I think that varies. I think it varies based on the classification. I think it varies based on your circle, you know.
So tell me what you mean about classification though. So let's double click on that just a little bit.
Okay. So the story I just shared about the couple that formed the business, you know, IT is huge. So you can take that and you can run with it, and it's a good field to be in, right? So, and not only that, they had the connections, right? So they had the connections, and which helped them to grow their business because they already had business owners in place looking for their services. So in their instance, it was a 18 to 24 month shift. And so there are some, depending on whatever other classification they may be in, say retail, right? I have a young lady that's looking to make the shift, and she's selling body butters and soap and candles and what have you. She's doing okay, not quite at six figures yet, but the progression is a lot slower because, again, of the area that she's focusing on, you know. So that's what I meant by classification.
Okay, yeah, but and I mean, one is services, right? One is e-commerce.
Right.
And there's a lot of competition, if you will, if you're looking at, you know, you got the big guys like Bed Bath and Beyond, you're competing with Target if you're doing this just online or through Amazon. So that's one of the points that I wanted you to kind of clarify. But in addition to that, you mentioned something that I think is really, really important, and that is that industry. And also your network is an asset, right? Yeah. And so your ability to scale is going to be directly correlated to, have you already done the things necessary to really build a potential client base once you do exit? Is that the point that you're making?
That is definitely the point that I'm making, for sure.
And then, I'm sorry, go ahead. Let me let you finish.
No, go ahead. No, I was just saying that was clearly my point. Yeah.
And so now we're on the execution aspect of the program. And so the question so we've talked about the mindset, really understanding that you can't think just because you have this income in that now it's just your personal bank, that you really do need to have different accounts for different things. You also mentioned the profit first model. And by the way, I'm going to make sure that we add that so that people understand what profit first is. And profit first is a framework where they really believe that you set up different accounts that are going to be for your overhead, for your owner's income, so that you're already every dollar now is being segmented into the to the expenses or the roles that money is going to play. However, the other point that I wanted you to make in terms of execution, if you could give us a roadmap, right? So I am starting my business, and as I have my full-time business, what are the steps that I need to take in order to execute? Well,
you want to form your LLC based on the state in which you're incorporated, right? Once you form that LLC, you want to go to the IRS website and obtain your tax ID number, right? Once you have that, so you have your LLC documents, you have your tax ID number, you can then go to the bank and open that business bank account, right?
Question though, should someone do that for you, Wanda, or should you do that yourself?
As far as setting up the LLC, I have to get back to, it depends on the classification, because some classifications are more intense and have a whole lot more red tape around that, right? So I would say go to an attorney, seek an attorney for certain things.
Okay.
So let me.
Would it be a business attorney, or that's all I want people to understand too, that, you know, every profession has expertise in different things. So I want them to understand what they need to be right? How to, because now you've got all of these internet companies, web companies that say, oh, you can do it all online. But the caution is that you need to make sure that you're setting it up correctly.
Exactly. Absolutely. And, I work with a number of real estate agents, brokers, and investors. And when you're speaking of the investors, and particularly where they're purchasing real estate and they're renting it out and things of that sort, and they're coming in and that home is still in their name, it's not under the business, then I would refer them to a real estate attorney. Let's get that deeded to your business. You know what I mean? And try to get the financing. And that's a whole nother story. You try to get the financing under the business and things of that sort. So yeah, you definitely want a business attorney, but depending on, again, that classification, you may need someone that specializes in your field.
Great to know. Okay. So I've got I connected with the right people. I've got my entity set up based on my classification. What's the next thing that I need to have in place?
Right. So again, we're going to the bank and we're setting up that bank account. And then we're not just going to the bank and setting up that account. We're forming a relationship with a banker. Okay. That's really, really huge. I have a client and, she wanted a vehicle and she was like, well, how do I get financing? I said, well, do you have a relationship with a banker? And that's always, whether you're financing a vehicle, whether you're financing equipment, furniture, whatever for your business, once you establish that relationship with a banker, that financing becomes so much simpler, right?
Yeah, that's great advice.
Absolutely. And this same client that I'm speaking of just reached out to me yesterday and said, hey, I asked them for a loan and without any documentation, they just approved me. Well, of course they did, because you formed that relationship with the banker and there's been no challenges again with your account, of course, and she has good credit. So there, but then you want to make sure that you have a way of tracking your expenses. Now, this is where it comes into, did you budget for that, or your beginning capital, shall I say, did it include working with that CPA, that accountant, or even obtaining that bookkeeper? Did it include that? Because that's huge. That's where a lot of people kind of go wrong, if you will. And so they start their business. One, they're not keeping good records. If they're not keeping good records, they don't know if they're subject to estimated tax payments, which are due quarterly. And if they're not making their estimated tax payments when they file their tax return and they have this huge liability, then there's penalties and interest on top of the tax liability. So you want to make sure you're keeping good records and you're working with a bookkeeper, you're working with an accountant to help guide you along the way. And with me, I was saying you're working with a tax planner, a tax strategist, because again, there are so many loopholes that you can take advantage of that will be beneficial to you, your family, your business, that you won't know unless you're working with someone with that knowledge. Okay, so that's
and then I want to talk about the other thing that I think is a part of scaling and what I've learned, and that is when you hire now. So it's one thing when it's just you hire employees, right? Sometimes you're using contractors, but when you hire employees, what's the next thing I need to make sure that I have in place to make sure that I am in compliance? And so often that is state driven, right? Not just federal, but state. So what's the next thing I need to do?
Yeah. If you're bringing on employees, yes, you do need to register with the state. You have to file the state taxes, the state unemployment, and things of that sort. But here's the thing. If you're looking at growing, and I strongly encourage that, because if you try to do it alone, your business will grow at a much slower pace, right? So as you're bringing people into your business, especially employees, you want to make sure that you have a relationship with an HR manager or HR consultant. I strongly encourage that. Now, if you're working with a payroll company, they have HR people in place and you can use that level of service. But therefore, you want to make sure you have an employee manual in place. You want to understand that whatever you quote that employee, $40,000, $50,000, $60,000, whatever it is, you need to gross that up when you're looking at your budget, because you have to match their Social Security in Medicare tax. So that's that 15.3%. Yet again, they pay 7.65, you pay 7.65. You need to understand these type things. And then, like I said, you have the unemployment for the state. You also have unemployment for the for federal as well. So there are additional expenses that you do need to keep in mind when you're bringing that employee in.
Yeah, I'm so glad you said that. You know, so much of this, of course, you can see I'm a business owner. And so when you get to these certain levels, you don't consider the other side of it or everything else that, actually hiring someone encourages. It's not just hiring that person, it's all the legal ramifications that come with that. And all of this you need to be able to do, because lastly, what happens if you don't execute and put these things in place? I want people to see the other side of that, because entrepreneurship and business ownership is not for the faint of heart. Give us a story of someone who didn't have the things in place. And so as a result, maybe you are advocating. Certainly you can't divulge personally, but what do you see as some common mistakes that trip people up and they end up with those liabilities?
Well, unfortunately, I could share another story with a business owner who wanted to cut corners, but she wanted to keep her staff. And so she wasn't paying overtime. Her employees were hourly. Overtime was not being paid. And there were some guidelines based on the classification that she was in that she was not adhering to. And the payroll taxes were not being deposited timely. The payroll reports weren't being filed. Long story short, it turned into a situation, actually the first situation I've had where I've said, you know what, I'm going to work with you and through all of this. But because of the amount of the liability, which at this point is 7 figures and beyond, you need to retain a tax attorney. And so I am currently working with the taxpayer, with the tax attorney, with the Internal Revenue Service, because it's a case that could technically be turned into a fraud or tax evasion type case. And, we've heard stories, and I mean, they are felonies. They're felonies.
Yeah. Yeah, I mean, I don't want to be Debbie Downer or anything, but I do want people to understand that I think we're seeing the business grow. We hear these stories about earner to owner, and it's almost as if like business ownership is being glamorized. However, it's not for everyone, right? But it's not to say, to your point, that there are different levels. It's not to say that you can't have different income streams. I'm a big believer in diversifying income streams, right? Mm-hmm. So you need to have, if you're going to have a full-time job, there's nothing wrong with you having a side income and you brought up some great examples, Wanda, just around the different types of businesses, right? There are people who are now getting into rental as investors, doing short-term rentals, with buying real estate homes, buying properties. There are all different kinds of ways that can provide you with opportunities to build wealth, not just through a job, but you need to your point, I guess that's the question. That was the point you were making, is the right business for you and your family. Is that the point that you were making?
Absolutely. Absolutely. The right business for you and your family, and make that business work for you. So take that trip. You want to go to Cabo? Go to Cabo. Take a business trip to Cabo. And because of tax code, you only have to show that you work 25% of the time that you were in Cabo for that expense to be fully deductible, right? So, but these are the things that you won't know. You will not know if you're not working with a tax planner or a tax strategist. You won't know that. And take your family with you. Now, I'm not saying that your family's expenses are tax deductible because they're not. unless your wife, your spouse, or a significant other is actually working in a business, and then it could be. But you have a family trip now that is at least 25% you're able to write off on your tax return, right? Whereas though if you were that earner and you took that trip, that's 100% out of pocket. So those are the type things that I strongly encourage the owners to take advantage of.
That's great advice. Okay, so I love it. This is exactly where I want it to be right now, because coming up next is our Analyze, Optimize, Maximize. We're going to tell you exactly what you need to do and know so that you can take this information and optimize it in your favor. So don't go anywhere, folks. We'll be right back.
These are the only bins that will accommodate larger rollerboards.
They put 10 in here?
10, and you don't come out till you die. And you eat him, you hoop 10.
Oh my God.
So what?
I'm Deborah Owens, America's Wealth Coach, and it's Get Wealthy. And I hope you're learning how to get wealthy, really leveraging tax advantages, right? What are some of the things that you can do to actually keep more of what you earn, diversify your income streams? That's certainly the conversation we're having with Wanda Watson, CEO of Premier Business Solutions. She is an accountant as well as an enrolled agent and is called the gatekeeper to the IRS. So Wanda, I love the points that you were making in the other segment. And that's exactly where I want to land here is analyze, optimize, maximize. So you're watching this show, you're saying, yes, I've been thinking this is something that I need to do. Yes, I have even a hobby or things that I do for other people, and I don't even charge them for it. That could be monetized. And if I were to put some structure around it, you could, begin to use some of the strategies that you talked about earlier that you may not be aware of. So where are some of the other areas that people could really leverage the business ownership to keep more of what they earn?
Well, take advantage of the depreciation of Section 179 deduction, again, because of the changes in the tax code, the ability to purchase a vehicle for your business and write off 100% of it, right? Depending on the weight and what have you. But those are the type things that you want to, look into, seeing if it works for you. You buy a vehicle and maybe it's not the 6,000 pounds that the vehicle.
So it needs to be six. So the point that you're making, it has to be 6,000 pounds or over, and the business, it's not like, it has to be used for business, but it's not like it's your business entity and you're using it in your business, but it's not like you've got to, be running a service, a transportation service or any kind. It's just owned by the business. That's the point, right?
That is the point. It's owned by the business. But now where people actually kind of make mistakes in this area, they don't understand that there's a percentage of personal use that needs to be accounted for if there's any personal use outside of the business, right? But they can buy a vehicle that's less than 6,000 pounds. Now, the conversations that I have is, can you wrap it? Can you put a magnet on it? those type things. So because then we're looking at, is it 100% business because now you're marketing, and so it's a whole nother realm. And so as long as you're depreciating it, you do have the bonus depreciation where you can write off the 20% in the first year and things of that sort. So there's a whole lot of little avenues there with the
Did you just need to make sure that you're checking those boxes, right? And I think that, right? So I think sometimes you hear things, you're like, yes, that's what I'm going to do. And then you get to the point and then you didn't do all of these steps that you're, the points that you're making, rapid, make sure that it is in some way marketing your business. So in that case, because it's wrapped, yeah, see, that's what I love about you. It's every time I have a conversation with you, I learn something new. And then, one of the points that I wanted to make, that I wanted to make sure we covered, and you've mentioned it several times, but the fact is that we recently went through a tax code change, which has limited the amount of deductions that you can take on your personal income tax return. There's a cap on mortgage interest now, right? There's a cap on state and local and property taxes. And so one of the, I'd love for you to just share with people, yes, that is true. But on the other hand, and I think you've been giving us some ideas already, other things that you can do.
Yeah. But see, that's the beauty of going from earner to owner, because as an earner, you're stuck there with those limitations. As an owner, you can work around that. So a portion of that mortgage interest or a portion of those real estate taxes are now flowing through your business return, even though you may not qualify to deduct them on your personal return. So that's huge. And the health limitation, okay, so on the Schedule A, you have to itemize on your personal return and file a Schedule A, and then it's limited to 7.5% of your adjusted gross income. But if you're an owner and you set up a health savings account through your business, then that's fully deductible. So those are the type things that you want to keep in mind. You have to put things in place to make your business work for you. And to the point I made earlier, you would not understand these strategies that they are available if you did not have that professional in your corner working with you.
Well, Wanda, you could not have said it any better. And that, what I want people to understand is that there's a difference between a tax preparer and a tax planner. In some cases, the point that Wanda is making is that, your accountant accounts for money, right? Mm-hmm. But they may not necessarily be expertise in actually giving you the kind of strategies that we've been talking about today. And that's why I love it when Wanda comes talking to Wanda Watson, because she always helps us get wealthy.
Absolutely. Thanks for having me. And I would just like to just say, if you don't have that planner, that strategist in your corner, because you say you can't afford it, you certainly can't afford not to, because you're leaving so much money on the table and you're giving so much money away without those strategies in place.
Yep. Like I said, financial ignorance is expensive. Wanda, please let people know how they can get in contact with you.
Oh, absolutely. You can reach me on Facebook at Premier Business Solutions, and our website is premiersmallbusiness.com. And you can call our office directly at 757-410-8030.
Excellent. And we'll make sure that we have that posted. Wanda Watson, thanks so much for coming on with us today. And when we come back, the 3 takeaways that you should have from today's Get Wealthy segment.
Hi, I'm Dr. Jackie Hood Martin, and I have a question for you. Ever feel as if your life is teetering and the weight and pressure of the world is consistently on your shoulders? Well, let me tell you, living a balanced life isn't easy. Join me each Tuesday on Black Star Network for A Balanced Life with Dr. Jackie. We'll laugh together, cry together, pull ourselves together, and cheer each other on. So join me for new shows each Tuesday on Black Star Network, A Balanced Life with Dr. Jackie.
Welcome back, everyone. I'm Deborah Owens, America's Wealth Coach, and I hope you have learned how to get wealthy through the tax code. That was the whole point, right? The secret to getting wealthy is hidden in that tax code, and I hope that we gave you some gems today. So let's talk about what your 3 takeaways are today. The first is, as you can see, the tax code really does favor owners over earners. And earned income, that W-2 income, is taxed at one of the highest rates. So finding other ways that you can possibly have a owner or a business, how that can impact you, keeping more of what you have coming in. And then finally, we talked about it briefly, but one of the other things incentivized in the tax code is real estate investment and ownership. And with that, I hope we helped you to get wealthy. I'm Deborah Owens, America's Wealth Coach. Thank you so much for joining us on this episode of Get Wealthy.